Have you ever wondered what the big players in finance are doing while everyone else is panicking about the crypto market? Well, let me tell you a secret. While many are selling, the smart money is quietly buying. And today, we're going to break down exactly why they're accumulating crypto right now. It's not about hype. It's about strategy. So stick around, because what you're about to hear could completely change how you see the future of digital assets. First, let's talk about the big picture. Institutions and savvy investors look at cycles. They've seen these dips before. In 2018, in 2020, they understand that after every major downturn, the market has not only recovered, but has reached new all-time highs. They see the current prices not as a crisis, but as a massive discount. Imagine being able to buy the internet in the late 90s during the dot-com bubble burst. That's the kind of opportunity they see in crypto today. They're playing the long game, focusing on the next 5 to 10 years, not the next 5 to 10 days. Another huge reason is the fundamental technology. The hype may fade, but the innovation doesn't. We're seeing real-world adoption happening every single day. Major financial institutions are building out their own digital asset divisions. Countries are exploring central bank digital currencies, which legitimize the underlying blockchain technology. Smart money invests in technological revolutions, and blockchain is one of the biggest of our lifetime. They're not just buying coins. They're investing in the future infrastructure of finance, gaming, and the internet itself, often called Web3. They see the developers who are still building, the projects that are still innovating, and they know that's where the real value lies. Now, let's get into the specifics of what they're buying. It's not just about Bitcoin anymore. While Bitcoin remains the digital gold, a safe haven asset in the crypto world, smart money is diversifying. They're looking at established platforms like Ethereum, which powers a massive ecosystem of decentralized finance, or DeFi, and NFTs. They are also researching and accumulating promising Layer 1 and Layer 2 solutions that aim to solve scalability issues, making blockchains faster and cheaper to use. These investors have teams of analysts digging deep into the technology, the tokenomics, and the teams behind these projects. They're making calculated, research-backed decisions, not emotional ones. Then there's the regulatory landscape. This might sound counterintuitive because we hear so much about crackdowns. But for institutional investors, regulation is actually a good thing. Why? Because it brings clarity and reduces risk. Vague rules are a nightmare for big money. Clear regulations, even if strict, create a legitimate framework for them to operate in. The progress we're seeing towards regulatory clarity in major economies like the US and Europe is a massive green light for institutions that have been sitting on the sidelines. It signals that crypto is here to stay and is becoming a recognized asset class. So what does this all mean for you? It means that it might be wise to zoom out and look beyond the daily price charts and social media noise. Pay attention to the smart money flow. Notice the announcements from major investment firms, the partnerships being formed, and the steady increase in institutional-grade infrastructure. The big players are accumulating because they see a future where digital assets are an integral part of our financial system. They're positioning themselves for the next wave of adoption. This isn't just speculation. It's strategic positioning based on historical cycles, technological fundamentals, and evolving regulation. It's a game of patience and vision. Thank you so much for watching. If you found this breakdown helpful, make sure to hit the like button and subscribe for more deep dives into the crypto world. Let me know in the comments what you think about the smart money strategy. See you in the next video.